Hi, I'm Charles McNamara with Paragon Wealth Management. What would you say if 34% of business owners don't have a retirement savings plan? Crazy, huh? Well, that is the stats. So today, what I want to talk about are some of the pitfalls that business owners can avoid so that they can experience the retirement that they deserve and work so hard for. So let's start with pitfall number one, not diversifying properly. So diversification is a common defensive investment strategy, but it's not always done correct. Often, a lot of times, business owners, since they're so good at what they do, they pile all their profits and returns they make back into their own business. They also, a lot of times, since they know they invest in what they know, they also invest in maybe one stock or one asset class, and this can be what we call lead to overexposure risk. So for instance, let's say a business owner is in real estate, flipping houses, rental properties, etc. They put all their money back into more and more properties. Great, it's doing really well. All of a sudden, we've got another 2008 comes. Well, now all their assets are tied up in real estate. You have a liquidity risk. And then also now you're subject to this long market cycle risk, which could be a real estate bubble. So it happened in 2008, doesn't mean it's going to happen again, but it could happen again. So to fix this, invest in other asset classes, stocks, bonds, mutual funds, money markets, alternative assets, precious metals, hedge funds, you name it. This will mitigate some risk and give you exposure to many asset classes. Maybe let's say real estate's down, but your precious metals, your money market, all that's doing okay, so you can now live off of that or use those assets. So the next one, failing or neglecting to set up or fund a retirement plan. So for instance, as a business owner, you're spending all your time, again, with your business, but as you know, you can set up your own 401k, SEP IRA, simple. And what these plans allow you to do is put more money away, which is a huge tax advantage, more money away than an IRA or Roth IRA, which is a huge tax advantage to you as the business owner and will allow you to save for your retirement nest egg and be able to save a lot for that nest egg. So allocate some of your profits to your 401k or simple or SEP, whatever you have set up. The other thing is start early. So maybe you set up a business in your 30s and you think, you know what, I want to put all the money back in the business. But even if you put a little bit of money away, whether it's your late 20s, early 30s, that makes a huge difference versus waiting to start. Maybe you put it off and you say, you know what, I'll wait till I'm 45 or 50 once the business is doing great. You've lost all that time and the compounding on the money that you could have saved previously a decade or 2 decades before. So start early. Pitfall number 3, underestimating healthcare costs. Healthcare costs are increasing very, very quickly. I've seen some stats that say people can spend up to 25% of the retirement savings on healthcare costs, Medicare, Medicare supplement, prescriptions, co-pays, you name it. The other thing is long-term care. So as a business owner, you can make a plan, put into that plan that you're going to set up an HSA, maybe purchase long-term care insurance. Have that as part of your retirement plan, and that'll take pressure off of your retirement portfolio. If something arises, such as a long-term care need, you'll be covered. Lastly, lack of succession planning, and this is key. You have a business, it's doing great, you're the main person running the business, maybe you have a partner or two, and you're the kind of the haymaker of the business. You're spending all this time, but you forget at some point, you're not going to be able to work forever. So you want to be able to transition that business and sell that business to somebody that's going to be able to do a great job like you did. If you don't do this, number one, it's going to hurt your retirement savings because the business is probably a big bulk of your retirement. So number one, identify a successor. Maybe it's a great employee, a great salesperson, a great manager, whatever. Identify them and see if maybe they want to take over your business later. Also, you have to decide, well, you know what, maybe I want to exit my business at 65, but I want to have somebody trained up and ready to go, the person that's buying it. So maybe you have to allocate 2 to 3 years of training that person so that they're going to be able to do a good job and continue to buy that business back over time. So lastly, once you set up that plan and the succession plan, Review it when necessary. Don't just set it up, because your business can change so much over 5 or 10 years. So don't just set it up and forget about it. Go back and look at that plan. Here at Paragon, we work with business owners all the time. We're able to work through a lot of these pitfalls that we talked about and set up a retirement plan that is specifically tailored to your needs. So please give us a call. Here at Paragon, we'll be able to help you out. Thanks a lot. We'll see you next time.